Hello and a warm welcome to Budget Yatra. On the show today, we continue to find ourselves on the Chennai leg of our Yatra, tracking the health of the auto component space and what the sector needs from the upcoming union budget. Now, the last few years across the country have seen a sustained push towards EV adoption, a move that has left the component sector at a crossroads of sorts. It elicited questions along the lines of, do India's auto component companies have what it takes to make that shift? And can the shift take place amid tariff pressures and persisting supply chain interruptions? I caught up with two of the most dynamic minds in the component space, Aditya Ganesh of Rane Madras Limited and Sriram Viji of Brakes India, to find out what the sector needs from Budget 2026.
I think the biggest word that sort of characterizes this period is uncertainty. I think a lot has happened in the last 6 months. We've had multiple tariffs starting with 25, certain products going at 50. So there has certainly been a rupee impact on every product that goes out of India. Having said that, the short-term impacts are not felt as much because the product development cycles are typically longer in automotive. So immediate supplies have not been affected as much as one would have anticipated. However, we anticipate that over the next 2 to 3 years, businesses that typically get settled now start production in 2027 or 28. Those programs are being delayed or decisions are being delayed because of this uncertainty. So I think it has been a challenging period, and it continues to be that until we see some policy or decision from either government.
Right. So Sriram, no immediate impact on order books then, but things don't exactly look the greatest for the foreseeable future, you'd reckon?
No, that's absolutely right. And if you just think about the auto component industry, we have a total turnover of about $80 billion within India. $20 billion is exported, out of which a little over $6 billion goes directly to the US and North America. So there's a big portion of sales from the component industry that's going into tariff regions. So I think it's quite critical for us to have, as Aditya said, some certainty around where this is going. And in the short term, there are impacts when people are quoting for new programs 2 to 3 years out. We don't know what the situation will be. So I think there are certain benefits and support from the government that could help benefit many of the players in this space.
Right. And it's interesting that we're actually having this conversation at this time and place, because even as we speak, gentlemen, the fact remains that the tariffs notwithstanding, supply chain pressures continue to be a bit of a bugbear insofar as the sector is concerned. The post-COVID supply chain situation, for a start, hasn't quite been too encouraging. What's the scene like? Have supply chain issues settled? Do you still contend with the fact that you're seeing a bit of a shortfall on the supply side? Maybe I'll start with you, Aditya. What are things like at the moment?
I think that's a great question. I think what we learned post-COVID is to endure and make sure that production lines do not stop. I think certainly post-COVID, the immediate impact was very hard, but I think recently after the semiconductors, we have had challenges with rare earths, for example. But I think industry has managed to secure supply lines for as necessary for domestic production, and that has been the pattern for the last 3 months. Again, uncertainty is a theme here, so we only take each day and each month as it comes. But as it stands now, domestic production has not seen a big impact, although it has been every day battling to make sure that there is no impact.
But Sriram, I think the one enduring as well part of the industry is the fact that despite the supply chain pressures that you've seen in the last half a decade, the industry has continued to grow. You've seen a growth in order books. The recent GST rationalization has in no small part also contributed to a rise in both sentiment and volumes as well, to an extent that you're seeing automobiles continue sales well past the traditional festive season itself. So surely some light at the end of the tunnel in what, like Aditya says, has been a theme of uncertainty that has persisted.
No, that's absolutely right. I think there is a lot of positive sentiment in the industry, and India is a growing country. I mean, we have an extremely large population, an aspiring population. So I don't doubt the industry will grow. But there are obviously challenges, and I think with high growth comes also a lot of risk. And as people look at investing, they want some certainty around where things will go. As you talked about in the last half a decade, if you see, you can label every year. The year of the container shortage, a year of the chip shortage, a year of the rare earth shortages. So I think we've had many challenges to deal with. And as an industry, we've learned to cope with volatility, right? We've just had to deal with this throughout. But if you look at where some of the countries have grown in the past, I think India has a long way to go and a steep curve that we should expect up ahead. And I think that's why we need a little bit more certainty that will help the industry invest and really get to its potential. Right? We do have an aspiring population and we want to be able to service that.
Absolutely. So I'm just curious now, Aditya, how do you cope? How do you get by despite the shortage, despite the rare earth crisis that we find ourselves in right now? And even as this EV transition is also upon us, what's the coping mechanism like and how has the industry been getting by?
I think what COVID taught us is very quickly to find ways to have visibility across supply chain and within supply chain as deep as possible. Not only directed by OEMs, but we have developed our own systems to have quick response and visibility of stock levels, container availability, freight, etc. So I think our systems have upgraded as a result of COVID. And coming to the second part of your question on EV, I think EV is here in India. We are seeing vehicles of very high quality being produced by Indian OEMs. And I think Indian tier ones have scaled up to make sure that we can supply to them. Many Indian tier ones also export to EVs across the world. So I think EVs, while the progression may not be as fast as anticipated, India tier ones are ready and are continuing to invest to grow in that area.
Right. But I'm also curious, and I'm hoping that I could get some answers from both of you. Even as that EV transition is well and truly upon us, there's been a lot of talk about how exactly this will impact the component space. For decades now, legacy businesses, much like yours, have been tuned towards building for ICE. And how is this poised to change the way you go about doing business, Sriram, if I may? Is there scope for product diversification? Is this an opportunity or is it more of a threat?
So the question about how EV will impact the industry, I think many people have talked about, but each company, as you look at, it's really dependent on the products you make. If you are a company that's really dependent on components you've made for IC engines for decades now and tuned and perfected that product, it is going to go obsolescence, right? So I think there will be a huge challenge for some of those companies. And it's not easy to say, today I'm making these engineered IC components, tomorrow I will make an equivalent EV component. The nature of products, whether it's electronics, motors, it's completely different for an EV versus a IC engine supplier. There are also many players, for example, any chassis players who are not as affected, right? So Brakes India will not go under the same transformation that an engine supplier like a turbocharger supplier would go through. So I think it is very dependent on the company that is going through the transition. It is surely going to shake up the industry, and I think people are wondering how to make that transition effectively. It's a tough one.
Now, we've spent some time on the road covering all that Chennai's auto components sector expects from Budget 2026, and we thought, why not make some time for a break? So with an early morning shoot done and dusted, I've decided to make a pit stop for breakfast to try out one of the city's favorite dishes. You guessed it, Pongal. With Tamil Nadu's Harvest Festival Pongal just days away, Chennai-based restaurant chain Geetham has decided to serve up not one, not two, but 8 varieties of Pongal. Now, for those of you who may not be aware, Pongal itself is a dish made of rice and lentils, whipped up to serve up a rich, creamy texture. And to join us in digging into this delectable delight is Mr. Murali Bhatt, the founder of Geetham, and his daughter Akshaya, who heads marketing here at the restaurant chain. Mr. Murali, let me start with you. What is it about Pongal that makes it everyone's favorite dish?
See, Pongal always will be the basic food for Tamil Nadu. So that's a tasty one. And Geetam always will celebrate each and every festivals. And Pongal also it has taken as a different view, and we have introduced some 7 varieties including all millets and
Right. So we'll come to the varieties that you're serving in just a bit, but let me start with you, Akshaya. Supposing someone from here hasn't had much of breakfast here in Tamil Nadu and wants to try out something that they would particularly enjoy, which dish would you recommend?
I think everybody comes here for the idli and dosa. But my personal favorite is definitely the Tenga Pal Kanji that we've also launched in our restaurant. So I think people should definitely try that.
All right, sounds good. Now, coming back to the 8 varieties of Pongal that you're serving this festive season and, of course, for Pongal itself, why 8 varieties? What are they all about?
So we actually wanted to bring different platter to the table, different traditional values also. So we try to do it with different millets and small grains that people actually used to cook with before. So we've tried to if you see the platter here, we try to have different varieties in both sweet and the savory pongal. So we have the traditional akkara vadisal that used to be served as prasadam, and we've tried to bring that, and the kudumilagu pongal that used to be also a prasadam that they give in the temples and everything. So we've tried to bring in different palettes that's celebrated across Tamil Nadu also to the table, so people can enjoy everything in one place.
All right, and with Pongal done and dusted, I have to ask you again, Mr. Murali, with the union budget just days away, or weeks away rather, what are some of the things that you feel the industry or the common man can look forward to from the budget itself?
See, the latest view also, the budget also, there's a lot of benefits to the customers. But right now, what the industry's expectation is input credit. Because already the restaurant is burning with the tax and other things, but there is no input credit. So the restaurant as well as the rental also, 18% we are burning, but there is no input credit. If that is all is there, it will be a very useful to the industry.
Back on the budget trail now, there's a whole lot that the automotive component sector needs in terms of fiscal policy and better R&D spend. And if there's one factor that connects it all, it's the very availability of capital itself. While repo rates have seen cuts in recent times, some believe banks need to be incentivized to lend more. I recently sat down for a chat with CII Chairman for Chennai, Ajit Tordia, who told me that unless bank deposits pick up pace, capital will continue to be sparsely available. We also spoke about PLI schemes and how the industry will require a bit more time before fresh capacities take form and shape. Here's a slice of that conversation.
The focus of the government on Make in India, or rather forcing the companies here to look at becoming less dependent on import, even that is adding to the the domestic market. People are compelled to look for alternate vendors, develop more vendors which are there. I'm talking in respect of auto components, whether it is wheels, whether it is any other components which was very easy to get from the neighboring countries, and today it is either domestic or at least from the countries where there is some sort of a duty concessions which are there, like Thailand and a couple of other countries which are there. So that is definitely helping. Make in India is definitely a big push, or rather I can say that it's like a stick which is there. The government is very clear, you need to look at India, you need to look at Make in India.
Right, and even as the talk of Make in India has been doing the rounds for I think a little over a decade now, so it actually has been a while, the fact is the duty structures that a lot of suppliers and component makers are faced with simply isn't bringing home the goods. While you have tariffed goods in terms of exports owing to President Trump, availability of raw material and the need to import isn't quite viable given the existing duties are in place. If you were to have one request to the FM with regard to changing of duties.
No, it is like, that blindly putting a stop to certain countries for, supply and trying to bring in barriers. It will have to be in a phased manner. You just cannot say that, I'm going to stop totally, karke, you need to pay, the counter on whatever anti-dumping duties which are there. That cannot happen abruptly. There will have to be some sort of a breather. The government has made its point that yes, we want you to make in India. We don't want India to be dependent on one particular place for supply. That point has now been made. PLI scheme is now in place. So to that extent, we have huge amount of investment coming in for fresh capacity, but those capacities can't come in overnight. It is going to take its own time. And wherever there's an import substitution or a large number of components where to come, it will need some time. And even today, raw material which is there again will have to come from these sources. So we are a long way. The government has made its point. Yes, we mean you will have to make in India. Please don't look at the path of least resistance by importing from easily available sources which are there, or just because the tariff, or just because the cost is little low. Even if the cost is high, make in India is a priority. That's well understood. But there will have to be some sort of more time to be given for transition.
And for the transition itself, certain policy initiatives will of course have to be brought in to help the industry.
No, you take it today, whether it is solar, whether it is batteries which are there, whether it is for EV ecosystem which is there, the dependence on one particular supply or one particular region is very, very high. So you cannot just stop by bringing in barriers which are there when we don't have alternates. Even if we do, there is going to be a back door. So if you are going to look at, I will going to get some of parts and then assemble it over here and then going to give, again, the overall objective is not going to be achieved. So let it be in a little more phased manner, give some more breathing time which is there to the manufacturer. I think that will help. If not, it will only increase the cost.
Absolutely. You spoke about the PLI scheme, and that's been spoken of, especially in the context of the recent influx of EVs and a lot of homegrown manufacturing in a sense. Not all component makers or OEMs have in fact made use of the PLI scheme. But in its present avatar, are there tweaks in terms of the policy itself and the scheme itself that you feel the industry could do better?
Today it's a fairly evolved thing. So whether you want it, the government of India has done. If it is a large project which is coming in, then the government is willing to custom make a project for you or a scheme for you. You need to spell out what you want, be it state and be it center. Both of them are there to support in all possible ways. I don't see that is a big challenge which is there. It is only how fast we are able to adopt or how fast we are able to bring in the manufacturing which is there or reduce our import dependence. That is a challenge. We need little more time for the transition.
The transition itself. So if you were to have a budget wish list now, even as we're merely a couple of weeks, if not 3 weeks away, what would it be?
See, there are two things which I would look at. A good thing, the interest rates have been brought down. Inflation looks to be under control. But the banks are having a big challenge in raising the deposit. Even if you look at last week's data, the rate at which the deposits are growing, it is good. It has come to a double-digit rate. But then the rate at which the advances have grown is much faster. So if the spur which the government wants to bring to the economy, it has to come by the infra spend. It will have to come by the banks will have to come and lend money. If banks' cost of funds are not going to come down, so to that extent it is going to be difficult for the benefit to be passed on to the customers. You may see in a particular sector because of the repo rates down, so you are able to get it down. But then actually, unless if there's a deposit growth, that can only come with enough and more money. Today, the SIP which is there is very good. It's very healthy sign to see such huge amount of money going into the investment in stock market is good. But banks do need money karke to lend. Ultimately, there would be a point when it is going to be a challenge for the bank to give. So we feel that the bank deposit will have to be made attractive. So how is it that the portion of the savings of the public which is there, of the population which is there, how is it could be channeled into the bank? Bank today is probably not the choice. Stock market has become the first choice, and with the runway increase in the prices of gold, silver, and stock market, so all those people who have kept money in the bank feel that oh God, we have been cheated. So I think government will need to focus to encourage people to bring money, some portion of the money into the bank. Right. So some sort of a direction will have to be there that the public is able to bring in some money. That's number one. And second is on ease of doing business. So everything is being spoken about. We have seen good reforms coming in the income tax, which is there. The way in which it is being administered, it has given very, very positive results. And I think next set is we are looking at a similar reforms to come in the governance of GST. So GST governance is something which we look forward. Today, understanding itself has taken some time because it's something that was totally new. And to that extent, one of the important thing which is there, one is the compliance levels, how it could be made more easy. And second is for the legacy which is there, since it was a transition, they had come with one odd Samadhan scheme. I think one more Samadhan scheme, if it were to come, it will reduce the burden which is there or the litigations which are there, and it will ensure more and more compliance.
Absolutely. That's no doubt a comprehensive list. But speaking of capital availability itself, you spoke about deposits and how crucial they are. But given the fact that the auto component sector, along with the textile sector, are the two most impacted by way of the tariffs itself, the textile sector much more, no doubt, granted. In terms of capital outlay or a financial package, would you feel that is the need of the hour in terms of automobile and automotives?
No, I don't think as such, the current schemes which are there are fairly good enough. If only we were to open up the markets which are there, like textiles are struggling really on account of, the imports which are there. I mean, the exports which are there, we are not able to export. So each area we are having our own plus points, whether it is the government schemes which are there, they are fairly in place, whether it is to go in for specialty textiles which are there or to come in with, for auto components. I think the schemes are in place, both state and central government are there. It is only to encourage more and more the manufacturers who are there to take up the benefits which have been packaged. And of course, we are seeing quite a lot of business which is there is being moved to places. At least we would look at central government spend also to come in Tamil Nadu, which is there. It is definitely going to help this particular state.
Right. And in the last year or so, a lot of the success story that the industry in the state and the city has thoroughly enjoyed is most visible by way of the real estate development, especially in the GCC sector. One would say that the GCCs have really been the real estate story of 2025. What is your outlook like in terms of real estate itself as far as Chennai and Tamil Nadu are concerned? In fact, even residential, Chennai was the only standout market while the others saw a bit of a dip after, granted, 4 years of sustained growth. Where do you see real estate development taking form and shape in the new year?
See, there has been a rupee depreciation which is really, helping the IT companies. More and more GCCs would be attracted. About a year back, I personally was worried with the advent of AI, what would happen to the jobs and jobs, how is it going to create, what type of job losses are going to be there. We also had the situation post-COVID, we had one or top companies here, top employers in IT sector are announcing that 25% of the workforce is going to be, working from home, or only 25% will be coming to work in offices and 75%. And today, all that particular thing is a pass. In fact, we are seeing more and more companies trying to force their employees to come to office for work. Obviously, working in an office in a collaborative environment is found to be more productive. The output qualitatively is going to be much, much higher. So to that extent, every company is looking at to bring in more. And we have seen a shift the way in which the market has moved in the last 4 years. We are seeing there is a shift towards quality. Even a smaller companies which were there, who were occupying probably, let's say in Chennai, in a small residential apartment or a small independent bungalow, if they were doing with 10 people or 20 people, today they also now want to move into a bigger place which is there, in a quality place.
One thing is for certain, there couldn't be a better inflection point for the Indian auto component industry. It's at the crossroads of fiscal policy, technology transition, and a massive EV shift that could change the very build of automobiles themselves. Will the sector adapt? Can the government's policy push help? And more importantly, can one of India's most resilient manufacturing ecosystems weather these geopolitical and energy shifts while hoping for a bit of lift on the policy front? The next few weeks should hopefully hold some of those answers.